Oh, okay. Yes, hi. Filippo?
Yep.
You're here? Okay, great. So nice to meet you.
Yeah, you too, Dale.
All right, so I read a little bit about your bio,
Okay.
and it kind of sounds like my journey, where you just went out there and you tried different things, and you go to webinars, and I had the advantage of learning at the Chicago Mercantile Exchange. So if I reached out, at least I was talking to traders in the flesh rather than online. So I've described you as a guy who now wants to help people avoid stepping on the same landmines that you stepped on. And maybe you could give us an idea of how it started for you and some of the experiences you had being self-taught.
Yeah, absolutely. Well, I come from a completely different background. I wasn't a trader to start with. I trained as an accountant in London, but I have always had the buzz in my mind, I guess, and the buzz in my ear to try my hand at trading. And in fact, I spent some years actually investing in the stock market, and with some good success. But part of that was obviously due to the fact that it was during the boom years. And then it came to a point where I discovered technical trading and technical analysis and the forex world, and so that got me completely hooked. And that's exactly what I was after, really, in terms of my wanting to try my hand at trading rather than investing like I'd done in stocks before. And
Any name or methods that were instrumental to you once you found this world?
I I found a group of people who met in London and talked about trading and charts and stuff. And then
Right.
one of them recommended Forex Mentor, which is a website which I think is quite well known in the Forex circles. And so
Who is
that's
that
how
guy? Whose business is that? I believe I've talked to him before. Who is Forex Mentor?
Forex Mentor. There's a guy called Vic Noble,
Okay.
and you might have heard of him. I don't know. He was or I followed his let's say methodology for a while, and he was quite useful. He taught me some really interesting stuff, but didn't quite cut it for me. So basically, I ended up sort of trying out a few things on my own, and then eventually I sort of realized that it's not about indicators. It's not about because people say, oh, the MACD is pointing up, therefore you buy, or something along those lines. But actually, it's really about price action. And I kept hearing some people say price is the best indicator of all, and I never really know what it meant until, by effectively spending countless hours studying the charts and even identifying setups after the event, but still, trying to identify the characteristics and the regularities and the patterns in those setups. Then I eventually realized, that it's a different thing to say. It's one thing to say the indicators have to line up. It's another thing to say, do you have price effectively on your side? And what I mean by that is that I use a good old-fashioned top-down analysis where I go to the higher time frames first, so the monthly, the weekly, the daily,
Okay.
and I then drill down into the 4 hour, the 1 hour, and then even to all the way down to the 1 minute sometimes, the 1 minute chart, to identify a low risk, high probability entry. And so to have price on my side means to have the higher time frames on my side, i.e. the wind in my sails, the momentum.
Like
Um,
it.
so I go with the momentum. I go with the trend and with the momentum. So I don't want to fight price basically. I just want to go with it.
Well,
But
they say Filippo that a picture speaks 1,000 words. So I just heard your testimony about your evolution as a trader. If you could share your screen, you go up to the upper left-hand side, and there's a box with a green arrow, and
yep.
share your setup. I'm guessing that your charts are naked, so
Um,
I just want to give everyone advance warning that this is X rated if Filippo has naked charts. Okay. So,
um,
so I'm
no,
waiting for your charts to come up. Let's see. It's
yeah,
right now.
yeah. I've actually got
Got it.
to
Okay.
I've got to disappoint you there.
You did, yeah. So I was hearing everything about price action, and now I'm looking at bands, and
No,
I'm
well,
looking at what is
Ale-
that? Stochastics, and
yeah, EMA
okay.
and volumes of
So
bands, but
therefore, even a
Sorry.
purist likes to have confirmation from the indicators with
That's
price action.
that's, that's correct. I will explain how I use indicators. So I have a different focus on indicators than most people. Most people say, as I said before, when the indicators line up, pull the trigger, and that's it. Eventually you will be right more often than not. What I do is instead is I study price action first. And so I do the top-down analysis. I frame the market with trend lines and wedges and triangles and head and shoulders patterns and so on, without looking at indicators at that stage. When I've determined the directional bias on the higher time frames, I then drill down to the intraday time frames to confirm the directional bias. So from the 4-hour or the 1-hour chart, typically the 1-hour chart I really use as my core chart. For intraday purposes. And then once I've determined the directional bias, I identify a key level for entry, a good level for entry. And then after that, only as a last step, as a confirmation to fine-tune the exact timing of my entry, will I use the indicators. So when they line up, I will pull the trigger, but only after I've done all the analysis for the directional bias in terms of price and the identification of a key level for entry. So
Okay, so we're looking at euro right now, based
yeah,
upon what you use for directional bias. What is your bias right now
uh,
in the euro?
okay. I'll show you because I trade. I'm a day trader, so I may have different longer term views than I do intraday. But let me show you what I would do, what I would have done today, for example, in terms of finding a setup. Okay.
Okay.
So let's say I have a daily chart here, and we have the prices making higher highs and higher lows quite clearly. It then had a retracement for the last 3 or 4 days, and price got to what this blue line is a 21 EMA, exponential moving average,
Okay.
and
Why
it's
did you settle on a 21?
because I just found it works.
Okay. That's a
It,
good reason.
yeah, it's one of those things. It's whatever it works for you. Whatever works for you. Other people
Okay.
use other EMAs or other indicators, etc. And I use the 8, I use the 21, and I use the 55 EMAs. Okay, these are my three sort of it's the triad, as it were.
Okay.
And so price had a retracement and nearly got to the 21 EMA and nearly got to this rising trend line, which to me trend lines are very, very important. And it sort of missed it by about, I don't know, 15 pips or 20 pips or so, and it stopped at the figure 11300. Okay, so on this kind of bounce, there would have been possibly an entry on a lower time frame. So if you then look at the 1-hour chart, you will see that price again started making higher highs and higher lows until it printed at the London Open this big blue impulsive candle. Okay, so that to me would have been a confirmation that the bounce on the daily chart was in play with some momentum, and that therefore there could have been potentially an entry within, or either within the candle or shortly afterwards. So I then would have drilled down to the even lower time frame. So in this case, I think it was a 5-minute setup or something like that. But before going to the lower time frames, I would have identified what to me is a very important level, which is the high from the Asian session. So I have the different days, the different trading days, shaded in different colors. So this sort of slightly darker shaded area is today, and the white shaded area is yesterday. In between, there's the Asian session, which tends to be quite quiet, and especially for the European sort of majors. But it's still, and it has a high and a low. And very, very often, these high and low from the Asian session are key levels for entry on the lower time frames. So if you look at this swing high here, for example, you have the high on this candle is 113.38, okay? And so going back to my impulsive candle at the London Open, at that level there would have been an entry on a lower time frame. So I'm going to show it to you now.
Okay, so Asia set up the breakout by being range bound, and Europe is what led the way.
Yeah, correct. Yeah.
Okay.
So you would have had this high here, which is the Asian high. I don't know if you can see it very well. I had to shrink the chart to zoom out, that is. But this is the high from the Asian session, this swing high over here,
Right.
113.38. So price breaks it, comes back to retest it, and bounces off, and up she goes. So
Nice.
when it comes to that, when it comes to retesting of this key level, then I will look at indicators. I will look at price sort of extending away from the ATMA and then coming back to touch the Bollinger Band. As you can see, it touches the Bollinger Band. In fact, it's twice. It's probably a 5-minute setup, actually not a 3-minute. There we go. It touches the Bollinger Band, and up she goes. So this is where I use the indicators, just to fine-tune the exact timing of my entry, but only as a very, very last step after having analyzed the daily chart and then the 1-hour chart, and having drilled down eventually to find the exact entry. Does that make sense?
Yes. Okay, so you do a lot of work to come up with this. These trading decisions. So you have quite a process.
Yeah, absolutely. It's you've got to think your trades through. You can't just jump in just because you see price moving. There could be all sorts of reasons why price is moving one way and then goes the other. So,
what do you say to people that have FOMO, fear of missing out on trades? And I miss trades every day.
Well, you've got to. Yeah, you've got to have to learn to live with it, because you can't take them all. It's better to take few good ones than many sort of random ones, as it were. You have to practice your restraint in a way, and practice your psychology. So I say there's a few people who follow me and ask me to show them how I trade, and one of their issues is the psychology. And well, for a start, I always say what Warren Buffett famously said. He said, "The risk comes from not knowing what you're doing," which is a valid point. A lot of people, there may be nothing wrong with their psychology. It's just that they don't know what they're doing, so they keep taking the wrong trades or mismanaging the trades that they're in. So anyway, apart from that, on a separate level, even if you do know what you're doing or what you should be doing, your psychology may come in and get you to make the wrong decisions. So you've got to practice.
I think a major factor in psychology is people over leveraging. What kind of leverage do you trade with, Filippo?
Yeah, I know. I mean, I use my broker's leverage, which I believe is 200 to 1, and I trade 1 or 2 lots depending on the situations. But it's yes, that is definitely a factor. That is definitely a factor, and obviously you've got to keep your risk as small as 1% of your account or thereabouts. Some people use 2%, some people use 0.5 or whatever. But you've got to keep it small enough that it doesn't impact your decision-making process, basically.
But your risk is not assessed by a percentage of the amount of your account. It's more assessed by a signal being negated, correct?
I'm sorry, say it again.
Okay, when you talk about people should only risk 1%, 2% of their account on any one idea, I think there's a difference between having a money stop, which is based upon your account balance, and having a market stop, which is based upon the contingency that got you involved in the trade that was compelling enough for you to take risk becomes negated.
No, that's correct. That's correct. I mean, when I see a setup like the one on the euro that I've just shown you, for example, what I will do is I will set my stop just below that level. Excuse me, just below that level. So, and when I say just below, I mean 10 pip, 12 pip maximum which means if price goes to my stop, it means that the setup has failed. So that's enough information for me to establish that the trade has failed. But then obviously it's a different thing to say how much I would have staked on that particular setup in each case. So yeah, absolutely, you're correct.
Okay, so when it comes to your setups, what's your average risk, would you say, in pip terms, using the methodology you use?
Yeah, well, approximately 8 pips on average.
Wow.
And that's because, as I say, I identify the levels for entry very, very precisely. I mean, it's an exact number, and price will sometimes miss it or overshoot it by 2 or 3 pips, but never by much more than that. And therefore, if it does, it means the trade has failed. And therefore, when I see it, price moving against me, even if originally I may have had a 10 or 12 pip stop, I will start reducing it right away, and very often I will exit my trade even before it takes my full stop, just because I see that it's failing. So yeah, that keeps the risk very, very small. That's the beauty of this methodology, really.
Okay, and what's your average profit potential risking 12?
Well, it's about 2.5, let's say 2.5 times, 2.5 to 1.
Okay.
So we're talking about, I don't know, 18, 20 pips or whatever it is compared to 8. So and I in theory the trades run for more, but obviously I scale out my positions while the trade is in progress, because obviously I don't want to sort of lose what I've made so far. I want to take partial profits and see how it goes. That's the way I manage my trades. So yeah, that's pretty much it.
So you have any macro views on what's happening here? We have the ECB this Thursday. The dollar has been fairly weak recently, especially with risk on in equities. You have a view on the dollar and the euro besides short-term views here? I assume if you do look at weeklies and dailies and you use your telescope, which I'm not sure how useful that is when you're drilling down using 1 minute charts or shorter term, do you have a macro view on what's happening here in FX markets?
I do have a micro view. So you have a number of very interesting themes playing out. First of all, the dollar is the big one basically that everyone's talking about, and I have a very interesting chart which is actually from the FX Street website, the US dollar index chart, and which is the monthly chart. Now you can see that price has been going up in a long-term uptrend very, very sharply, and then it's been consolidating and retracing for the last 3, 6, 7 months basically, including this one. Now this purple line, I don't know if you can see it very well at your end, but this purple line is the ATMA, which I follow religiously, as I was saying earlier, and you can see how well price respected it until now. Basically now we are challenging it again to the downside, and if this month closes below the ATMA, it's going to be quite an important signal. So I think this is a really critical juncture in the market, when the market was kind of pricing in a rate hike from the Fed in September, and then eventually was disappointed. Now they're talking about December, but some people are even talking about March next year. So there's a lot of uncertainty now in the market, and price is basically stalling to reflect that. Once there is a bit more visibility and more clarity on that front, then you might be able to see price either resuming the uptrend with a lot of momentum and impulse, I would have thought, or
where's that 18 week 18-month EMA coming in? 95.
This is the 8 EMA. It's about 9,500. Yes.
And it's what, the 8 what?
The 8 EMA.
8.
Yeah. Not 18. It's 8.
8. Okay, so it's an 8-week EMA.
8. Well, in this case, it's a monthly chart, so it's an 8-month EMA.
Okay, an 8-month EMA. Okay.
Yeah, and it's a 9,500. So
95. Okay,
so
because
what?
we only have about 11 days left in the month, so you don't know what kind of candle you have until the month ends, right?
That's correct. Yeah, yeah. So that's what I'm saying. So at the close of this month, it'll be interesting to see where we are really with respect to the ATMA.
Would you expect possibly a decline to your blue? Not sure what EMA that is, back down towards under 92. Could that happen?
It's possible. It's possible that price basically will set up for my sort of kind of setup in the sense of having the Bollinger Bands, in the same way set up as I use for my lower time frame setups, because my these setups are scalable to any time frame. So it could well be that actually price is loading up on the monthly time frame to set up and touch the Bollinger Band, which you can't see from here because I haven't set it up like that on this particular chart, but it
Where
may
would
well
that
be.
band come in?
Roughly just below the blue line, I would have thought 9,200, but that would take a lot of retracement. So it will, I don't know if it's very likely to do that, but it's possible that there's going to be a deeper retracement before then price resumes the uptrend, because at the end of the day, even if the rate cycle starts a bit later on in the US, it's still a new rate cycle, and it hasn't been like that for 7 or 8 years now, and so the dollar is bound to become stronger and stronger in my view. The
Well,
economy.
maybe, I mean, even taking it down to 90 would not upset the bull case that'd be halfway back.
That's correct. Yeah, absolutely, absolutely. Yeah.
Okay, nice look.
Yeah,
Thank you for sharing that, Filippo.
not a problem, not a problem. Then obviously you've got the ECB on Thursday, and they, there's talk that they might enhance their QE program, so that would obviously push the euro down some more. Let's have a look at the daily chart. This is a weekly, actually. So if you look at this monthly chart, for example, this is a monthly chart for euro US dollar. You can see the price is in a downtrend, then it consolidated, and it's basically touched the Bollinger Band here, just above the ATMA, and it might well be that on Thursday it's going to resume to the downside to resume the downtrend, basically on the back of the ECB decision, if they do end up enhancing their QE program. So it's going to be interesting to see what they do on Thursday.
Okay.
So these are the two biggest themes, at the moment. And then obviously there's the Bank of England, who are saying they're going to follow the rate cycle from the US. Sometime next year, they said, and so we'll have to see what happens there. Then there's the Bank of Japan, who have been kind of toing and froing a little bit. There was talk that they were going to enhance their QE program on their part, and then they said that it wasn't necessary, and so we'll have to see what happens there. But it doesn't seem to be the hottest theme at the moment. It's more US dollar and euro and pound, really, in my mind.
Right, and all of them with central bank actions or activity or news in the next week. ECB, followed by the BOJ, I believe, next week, and the Fed, correct?
Yes, that's right. That's right.
So that would bring me to another point. Do you trade red events, or you stand aside, Filippo?
Sometimes I do. If it happens to set up so clearly that it's absolutely compelling, then I will, but not all the time. Sometimes it's just too difficult to tell. It's just too close to call. So it depends really on the day, and any circumstances is different, and I have to see price telling me what it's going to do. The last ECB announcement I actually did trade, and it was quite a nice trade. But it set up so clearly that it wasn't, to me there was no doubt what it was going to do. So, but
so Draghi was successful in talking the euro down a month ago.
Correct.
But it only lasted maybe one more day afterwards. So,
yeah, absolutely.
So maybe what we have here, I'm just guessing, is that if the euro is selling off into the Draghi speech, that perhaps this time it sets up a buying opportunity sooner than it did last time.
Yeah, we'll have to wait and see. We'll have to wait and
Yeah,
see what happens on the
well,
day.
that's Elster Pinkard stuff. So, um, what kind of business do you have besides trading your own account, Filippo? Do you have
Well,
an education type business? I know you have a blog. What do you do besides trading for a living?
Yeah, as I mentioned to you on my bio, I have a website through which I acquire any students who would like to learn the way I trade. Because originally I had a few guys who said to me, we've known each other from various groups and websites, like Forex Mentor, for example, before, but I like the way you approach the markets and you study price, etc. So can you teach me? So that's how it all started, almost a year ago now. And so I have I do one-to-one tuition services and weekly once a week webinars where I show the setups, I answer questions, I talk about the markets and what's happened
You can show your website now if you'd like to.
Okay, yeah, I'll put it up.
This is your commercial, Filippo. Oh,
Yeah.
there's Yohei Elam on that last page it showed. So it's called, the website address is what? www.forexcorporation.com?
It's forexcorporation.webs.com.
Okay.
So, yeah, it's hosted by one of those web hosting services, and yeah, that's where basically people can see what I offer in terms of products and services. And I've also got a page where I actually explain the setups in terms of the indicators, but as I've shown you earlier, it's more about price action and doing your analysis first and then identifying the setups. So it's very how can I put it? It's a very friendly service. So yeah, I offer support throughout on email, on Skype, and it's not just about the webinars or the one-to-one tuition. So yeah, that's basically what I do.
Okay, well, I appreciate you spending some time with us and providing some views and sharing your methods, Filippo. So I wish you good hunting. Thanks for joining us today, and the best way for people to follow you are to go to your website. Your Twitter handle is @Filippo_Gioia. Is that correct?
Yes, that's correct. It's actually on my website, which is forexcorporation.webs.com. There is my contact details. So there's my Skype handle, there's my email, there's my Twitter handle, and there's my blog address. So people just can go there and contact me if they want.
Well, thank you, Filippo. Good hunting into the ECB and beyond, and thank you so much for joining us and sharing your journey with us today.
Thank you so much, Dale, for having me. It's been an absolute honor and pleasure.
Thank you. Good hunting, buddy.
Thank you. Bye-bye.
Bye-bye.